And I'm going to. Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 7:41 p.m. Eastern Standard Time on June 24th, 2018. This is a weekly strategic update that we do to help all our members and traders get ready for the following week and the following weeks. We try to do some forecasts, some strategic guidance on what markets are going to do, what individual stocks might do, and a couple of broad perspective, a couple of important points on the broader perspective on the overall markets, which has certainly helped many people over the years since we started here at Clueless A Trading on April of 2014. And I intend to continue with these weekend updates instead of writing a long blog in my fancy English and no one understands what the heck I'm writing. I'd rather speak very plainly and directly, and everyone can hear this on the recorded session that's going to be uploaded to the YouTube channel, which, by the way, you guys should all pass on to all your friends and colleagues who might have some interest in understanding the realities and the real news on the market rather than the fake stuff that's propagated everywhere else, or reported a bit too late. Let's put it that way. So on that note, let us begin. So let me give you a couple of quick broader perspective. Obviously, we all know by now that the most important topic that's dominating the markets and the most important positive and negative catalyst that is dominating the markets is the so-called trade wars. In my opinion, based on everything that I believe in and what I know, but then what do I know? Because we're just, we're just a normal, we're just a somewhat of an intelligent trader trying to make a judgment. But at the same time, I do believe that there is never going to be a full-scale trade war because it is going to be extremely costly, not only to us, but to the emerging countries, whether it be China, India, and the developed countries like Europe. It will be so costly that, like the laws of nature, at one point you can't turn back the damage. And nobody wants that. President Trump doesn't want that, and neither do any of the other foreign leaders out there. But heavy-handed talk and all kinds of things will be coming from both sides, and we are in the midst of that right now. So the biggest risk to the markets right now, to be honest with you, is an escalating war of words rather than a war of trade. Escalating war of words between us, China, Europe, Canada, Mexico, and such. So we already know that. So the risk is known. And in a model that when in anything that we do, we try to build either a mental or a mathematical or a trading model based on what the game theory outcomes can be based on the input being the trade situation. What are the possible outcomes? We obviously have to consider both the long and the short side when it comes to it. So saying all that, that is the main 800-pound load that's sitting on the market right now. We all know that. Other factors such as the North Korea situation, which was very craftily and diplomatically diffused by good old Donald. I think he did a fantastic job on that front. And obviously that has been put aside from now. The Iran situation is somewhat controlled, and that is not something that's in the forefront and the eyes of the market at this point. Okay. Any of these things can suddenly rear their ugly head, but for now, we got to deal with what Wall Street is concentrating on. And being an ex-Wall Streeter, believe me, I understand a lot of the things that they are looking at this point and how they're going to play the market, or in many cases manipulate the market, so that everybody is either left in the bunkers with the keys thrown away somewhere, and they can't get out if the market takes off like a rocket, or basically they're just going to force them to set aside, sell their existing positions, and make some real fundamental errors that we have seen happen over and over again, right? Where markets take off like a rocket, and that's what we're going to look at tonight. So take off like a rocket or they fall, but generally speaking, the participation in the market is so minimal right now, I don't know who's left to fall, to be honest with you. Okay, we dropped 800 some points on the Dow, and I think for the month, for the week, we were down 500 points. So, we're not talking about it being up 500 points, and I'm talking about the Dow Jones Industrial Average, and then wondering whether we are too overloaded on the long side. No one is overloaded on the long side. I'll tell you that right now. So, saying all that, let's take what I'm going to try to do and make this reasonably short is I'm going to give you a zoomed out version of the markets. And this is extremely important for us as daily traders, or active traders, or swing traders during the week or during the month. I'm going to show you a zoomed out view of the market going all the way back to the 1996-97 period when I actually first started on Wall Street, and then where we are today. And I'm going to just show you a couple of things, actual facts on the ground. Not my opinion, of course, but at the same time, you're seeing actual charts which are undeniable. What is going on here? Hold on. Which are undeniable, and oh, that's great. 1 second here. And you can't refute the fact what the actual charts are looking like. That I can't manipulate. I can manipulate my opinion, and everyone does that. And I can always, state my strong argument on one side or another. But the charts don't lie. They will basically tell you where we're going. The tough part is trying to read them when they're actually starting to go there, up or down. So, okay. So starting on that note, and let me just cover this very quickly. So here we are back in the 1996-97 period. 1998, we had this big drop here, which many of you might remember, might not remember. They basically said the world was completely ending, because for that time when the S&P was trading at around the 1200 level, 1000 to 1200 level, that was a big drop. That was a 20% drop in the market, and that was known as the Asian flu. And it's also because one of the largest hedge funds in the world, long-term capital, blew up because of bad bets made on the Russian economy. Okay, and then the Asian market started to collapse because their currency started to go down the tube. I mean, there was a worldwide crisis. Okay, and I had just started on the street. I'm learning. I'm like, great, this is fun. But hey, I knew it was in my blood, and I didn't quite understand what was going on. But I had a good sound background on understanding economics, and I understood what some of the stuff that the big boys were talking about, and my learning process had begun back in 1997. So this was the big one that they said would end with the big one. Well, it didn't. It lasted for about till about early 1999, and then we went into a massive bull market. That was a massive bull market for that time, okay? And what do you think that was? Because at that time, I'll give you a hint, we had the highest participation ever on a percentage basis by the average US investor in the stock market in recent memory. What do you think that was? It was a huge bubble which ended back in 2000.
Y2K.
Yeah, basically the dot-com bubble. Okay, the dot-com bubble. The Y2K was one of the things that propagated the market from coming down. But this was the time that every cab driver in New York, the anecdotal and real, were basically talking about what dot-com stocks they were buying. It's just like the Bitcoin mania. Okay, and the housing bubble mania, which was this one. Okay, so bottom line is this was the time, believe it or not, where we had the most, and I was there in the real world of Wall Street, when literally you could pick up the phone and the institutions would be sending, it would be basically ready to reallocate 10, 15, 20 million dollars into their portfolios. The average high net retail customer said, no problem, I'll send 100,000 in for my portfolio, big shots. And you know what? This was the real bubble. Since then, believe it or not, and then the bubble crashed. And the bubble didn't crash because of the dot-com bubble. That was part of the reason. The bubble also crashed and culminated in the lows back around 2002, end of 2002, because of a credit bubble, which is basically what really spooks markets. Enron. All right? One after another, Enron, WorldCom, these companies, big household names blew up. Now, I'm going to I'm going to kind of accelerate through this. The only reason I'm mentioning this, because unless we have a broader perspective on the market, we're going to constantly keep on screwing up on our trades. Because when you get into a trade, you're going to either have a bullish or a bearish bias. If you're going into a trade thinking that the market's going to completely collapse tomorrow, you're going to sell out for a minimal profit or sell out for a big loss because the market volatility pushed the market down 70 points right in the first half an hour of trading. I don't need to remind everyone because it happens every day. So unless we have the bigger picture in different scales, this is the monthly, obviously, going back a long time, and then we're going to go into the daily and the weekly and the daily, you will never be able to really manage your mental frame as well, which simply means you won't be able to manage your trades. Period. You got to have the bigger picture and you got to manage the smaller picture. That's just the way it goes. So bottom line is the Enron crisis happened, the dot-com bubble burst, people lost fortunes, and they said, I hate the stock market. The stock market is nothing but a gambling casino, blah, 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 blah. Okay, great. The stock market is the foundation of our great economy. All right. Just like the housing market is to a certain degree. The stock market more so. So the bottom line is that, and then we had a fantastic recovery that lasted all the way up towards 2007, 2008. That recovery was due to massive rate cuts, the U.S. economy basically washing out its excesses, credit started building up, all kinds of good stuff. Housing started coming back, low interest rates, not as low as it is right now, but lower for that time. And then the next bubble started to happen. Now, each of these bubbles generally lasts about 10 years, okay, or 6, 7, anywhere from 6 to 10 years. So bottom line is this housing bubble was nothing to do with the stock market, believe me, okay? They were flipping houses like it was just like, flipping penny stocks. No doc loans, you name it. All kinds of stuff. All kinds of people were involved, right? And then those were packaged into CDOs, CMOs, collateralized mortgage applications. Basically, they were packaged in tranches and sold all over the world. They didn't understand what the heck these streams of income were coming from. They just knew that there was a mortgage somewhere in Lollapalooza or wherever it is, and somebody was paying their monthly monthly payments on their mortgages, and everything was going to be peachy. Except when the economy started to slow down, all kinds of other things happened. They couldn't make it, and they overhawked. They're buying $1 million home with a $20,000 income. Great. That's what happened. They stopped paying. Foreclosures rose. All kinds of things happened. Bank seizures, all kinds of synthetic instruments were created by the Goldman Sachs and the more JP Morgans of the world, Bank of America, a lot of them. Everyone was complicit in this. Okay? And boom, the market crashed. That crash lasted from 2007 to March 9, 2009. The bottom of the market was 666, the devil's number. SPX 666. This is the S&P 500, not the E-minis, not nothing. It was the actual S&P 500, 666. Fortunes were lost. Nobody ever wanted to touch the stock market. That's it. We get the dot-com bubble. That crashes now. The housing thing. That's it. We're just going to basically never, ever buy a stock. Pretty much that's what happened. So that back to back, within a matter of 10 years, this type of two massive collapses in the market left such a dent in the retail psyche. That includes all of you. Not all of you, but most of you. Like dead scared every time the market goes up, we're going to crash. And that also happens in a micro way every single week. When I'm showing tactical lows to buy on a Wednesday, for example, and the market gaps open big time on a Thursday, and this happens repeatedly, by the way, very few take advantage of it. And that's okay. That's not my business. My business is to basically pass on the information and try to, give you some intelligent guidance. I don't advise. I guide. Now, you don't have to follow me blindly. You just, use your own judgment. So that stayed, and that trauma, the blunt trauma that hit the U.S. retail psyche or the retail investor, mom and pop, and the average individual investor, has left such a deep scar, that trauma, that it has still yet to recover from it. The mental psyche, yet the market has recovered a gazillion % from there. As you can clearly see here from 2009, 9.5 years later in 2018. The fear, the trepidation, the terrifying bunker mentality has not left the market. And along the way, there have been corrections. This was 2011. We had the Greek crisis, all kinds of stuff. Remember the headlines? Greek bailout, Greek bailout, Greek bailout. The German finance minister coming in, they called him a Nazi, whatever, because he was so tough on the Greeks, because the Greeks were not paying their bills and their government was corrupt, all kinds of stuff. The Greeks, in a way, created their own mess, and the Germans didn't help either by lending them way too much money, and other people too. So that's where we had a nice correction. So here we go again. Nobody wants to touch the market. Then we went off on stage 3. Remember, this is wave 1. That's why I put 1. This is wave 1. This is wave 2, the correction. And in between that, there was a fear in the China markets. I mean, you name it. Remember the fear? I know fish eyes remember back in 2014, like, wow, the Chinese market's about to collapse. They're shadow banking, and those are serious things. They have a situation where there's a huge underground economy in the shadow banking side, where a lot of the assets are, not accounted for. So all kinds of stuff. There were interest rates fears, rate tantrums along the way, everything. The Fed's going to go nuts. So 2016, we had a lot of stuff going on. The Fed moved away from quantitative easing. In other words, they were not buying. They stopped and started lowering their purchases of corporate bonds, as well as mortgage bonds and government bonds also. And their quantitative easing came to an end. They said, that's it. It's over. The market will never, ever go up. So there was a nice correction. Brexit happened. And finally, the election happened. They said Donald Trump's going to win, and it'll never, ever, markets will just fall and never go up. Well, markets did fall about 1,000 points after hours that night, but after that, it never looked back. Go listen to my videos from November, early November, right after the elections, what I said. I said this is going to be Brexit on speed. I know my good friend Fish Eyes remembered that. I said this is going to be Brexit on steroids. That's what I said. It was going to be Brexit on steroids. In Brexit, we turned around and we went up. Here, let me point out. We went up hard. Then came the correction right before the elections, all kinds of stuff. This was the elections, and this is what happened. And basically, I'm sorry, let me just make sure I have the dates here correctly. 2016. So here was the election part, actually. This was Brexit and all kinds of other stuff. And let me see here, 2/1/2016, 1/1/2000. Okay, yeah. So bottom line is that the markets did fall quite a bit, but they never looked back from where they dropped. And this was down here. We actually came back and retested these lows after hours. Okay. Now that was wave 4. This is wave 5. Wave 5 generally is considered to be, under Elliott wave theory, and I'm not a specialist, but I do understand it reasonably well, is considered to be the so-called final wave of a big move. And wave 5 generally is equal to wave 3, according to Elliott wave theory. And you guys can cross-check that, cross-reference that. So this is wave 5, this is wave 3, and this is wave 5. You can see here that it's almost of similar length. And it is not quite. This is longer. So you can see what I'm talking about. So at this point, this is where we are, and this is where I'm going to end this particular segment, which has to do with the monthly charts, because we don't want to be sticking here talking about historical perspective. But the historical perspective is telling us what is happening right now. This is your acceleration channel. These two lines. Let me change the color so it can be clearer to all of you. And basically, you can clearly see here. I don't think anyone, and if anyone disagrees with me, please, feel free to mention that. But you can clearly see here that we are within this acceleration channel, and we are starting to create a cup. These two this were the two of the most difficult months. In between, we did make some money. We lost a bunch of money, but we still made some money. And those were February and March, if you guys remember, right? I'm sorry, March and April. This was February and March. We had that big spike in January when that was another mini wave 5, by the way, where I called it wave 5 too. Go back and look at my videos from that time. They're all there on the YouTube channel. Just go by the date. And that was when everyone was very excited. Chat rooms were full. Everyone's very excited. And I did say that, generally speaking, this is wave 5. You cannot be going crazy. Make money. Tactical. We're tactical. We're making money. But you cannot be getting too giddy with what the markets are doing. That was the highest inflow of retail mom and pop money in the month of January. Obviously, great jubilation and the inauguration and President Trump, business-friendly policies, all kinds of stuff, excitement. So a lot of mom and pop traders put in their money after completely not putting in money all these years. Guess what happens? The market crashed. This was a crash. We were down 2,500 points on the Dow. And they said, that's it. Next time, I'm never going to touch the market. Trump or no Trump. That's it. It's over. Guess what the markets do? the markets turn around. You have April, May, June. If you look at a pyramid for a technical basis, and I have no opinions, clearly it looks like the market is going to at least try to test the mid 2800s or at least 2800, if not test the highs, because that's exactly what it's looking like. Internals, looking at it very simplistically, the full stochastics are also indicating uptrending, indicating that the markets want to get overbought, and that overbought situation most probably will be somewhere close to the previous highs that we went to. What happens at the previous highs? Well, if this is a true cup formation, then it's going to pull back. It's going to retest this powerful uptrend, which started all the way back in 2009. Okay, the powerful uptrend line, this channel, which it broke out of in the month of on the month of November, right there. I hope you guys can see this month of November. That's when we broke out of this multi-year channel. Look at my videos, look at my charts from that time. I was pretty much right on that ball that it was going to be a ascending triangle breakout, which you can't really see here on the monthly chart, but it was an ascending triangle breakout. And many of you were in there and many of you were not. It's okay. And that ascending triangle breakout went up for another 2 months, culminating in the euphoria. We're happy, very extremely happy chat rooms. Everyone's involved. Not to say everyone's involved, but they're all like giddy, buying highs. And bang, what happens? The chat room goes silent. Nobody's around. Nobody wants to buy any tactical lows. They're just gone. Then they come back. But that's behavioral economics, behavioral finance. Instead of looking for great opportunities to buy and tech stocks making new highs, and all my recommendations that I've given, whether it be Facebook, Netflix, Amazon, Tesla, from months and months ago, Booking.com, i.e. Priceline, that have gone up hundreds of points, you never got any real participation. And that includes most of you. Myself included. Did I hold it from the lows and all the way to the highs that I showed on my charts? No, but I at least took staggered profits along the way. But many of you just sat there and made zero money. So those are the perfect moments. So bottom line is that's just the nature of the markets right now. But looking at the technical chart, you can see here this acceleration line is quite valid. And as Trump plays his hardcore poker game, and this is hardcore poker. This is not for kids, guys. This ain't strip poker, all right? In the Poconos. This is hardcore diplomatic poker. And in the end, it's going to be resolved to a certain degree. No one's going to be very happy, but the markets will ramp. It's going to happen. Now, whether it happens from this level, it's going to basically get up there. The markets are going to go to 3,000 to 3,200 based on my game theory assumptions of what will happen, or it might start from a slightly lower level. If things really break down and things really unravel to the point where they're not fixable, Humpty Dumpty fell over the wall and they couldn't put him together again, right? Something like that. If that happens, then we are going to test the lower end of this channel on a multi-month basis. It's not going to derail the bull market, because the bull market is not derailed as long as the uptrend channel continues. It didn't derail the market when it hit the bottom of the channel. These are very precise touch points, and the market will go to somewhere below 2,400. That is a 3,000 point drop from where we are right now, and pretty much where we were at the beginning of 2017. Can that happen? Sure can happen. As we say in New York, excuse my friend, when shit hits the fan to that degree you can't clean the shit off the walls, well, that's going to happen. Do I think it's going to happen? I think it's a low probability move. But it can. But looking at this current picture here without guesstimating too much, we have this zone to at least get up to. But I'm always fully vigilant as to what might happen, because my charts are very clear where it can hit, where it can break down, and I will take appropriate action. But for now, the monthly charts are intact within the acceleration channel and resting right above the broad multi-year channel that the market has broken out of. Let's move on. The next one is your weekly chart. The weekly chart here if you look at it purely from a technical standpoint, has no signs of deterioration. Some of you, like my friend Fish Eyes, I would say, who is pretty well adept at understanding a lot of these patterns and my charts and stuff, this is basically a cup and this is a handle. Somewhere around the 23, and as you zoom in more and more, as we will do tonight, you will see where those levels are, where it'll engage, either break down or they'll bounce from. So somewhere in here, which is around the 2740 level or so, is a very critical short-term support. And if that short-term support breaks, I have a red line drawn here, which also happens to be the lower end of this wide weekly channel, which is 2700. How many times have we bounced over 2700? Many, many times. It's a very pivotal support. Breaks that, 2655. I can sit here and give you a full idea that it's going to go to 2655 because there are way too many variables in the game theory model, which I don't know. And I can game what Donald's going to do. I'm a fellow New Yorker. I know exactly how his brain works. Trust me, I do. Sometimes I don't, but most of the times I do. But I can game what the Chinese Premier Xi Jinping and whether the European, as I like to say, socialist leaders, some of them, and the EU Governing Council. What kind of name is that? That's almost like Orson Welles, Governing Council. Like, great, you know. So the Governing Council, who keeps on slapping Google and Facebook and stuff with fines right, left, and center because they hate our great companies. Okay, what exactly in their mind? I don't know. Do I have enough knowledge between my readings, my understanding of Europe, my cultural understanding of what goes on overseas? Yes, I have a pretty good understanding, but I cannot game them like I can game our own government and the markets. So just keep that in mind. So saying all that, it's in a bull flag. The bull flag becomes completely unraveled if we fall below the 2740, 2736 level, and if we fall below the 2702, in which case these zones come into play. So I'm fully aware of that too. But for now, I got to go with what I see now. That is still a bull flag. Cup, handle. What happens with cup and handles? 80 to 90% of the time, they break out as long as the primary trend is intact. Now, the primary trend is very intact, ladies and gentlemen, and this will play into every single trade that you do. The primary trend is very simply, very solidly intact because look at the channel. Is it trending higher or is it trending lower? Stating the obvious, it is trending higher. So as long as the primary trend on a weekly basis or on a monthly basis, like I showed you, is trending higher, then these are minor corrections, and I have to consider this from a technical standpoint. I have to classify it, mark it as a corrective bull flag for the last 2 weeks. Everyone understand what I said? Yes? No? Does everyone understand what I'm talking about?
You do.
Okay, good. Thank you, Mary. I appreciate you saying that. Because Mary is a new member. I know Mary has been around the markets for a long time, but the technical part of it, I think, is a bunch of stuff that is kind of new to you. So when you say that you understand what you're saying, that is extremely encouraging. Thank you. So, because I'm not really a good teacher, believe me. All right, I have very little patience with a lot of stuff, but I like what I do with you guys, and that's why I have a lot of patience when I'm explaining these things. I don't think I could sit my son there. I used to when he was younger. And he knows more about the Federal Reserve and QE when he was younger. Before we went off to college, and I used to quiz him, and he would give me the answers. I'm like, gotcha, you got it. But aside from that, let me try doing this with my wife. She'd be like, hey, take a walk. All right. So let's move on. Now we're getting into the closer zoomed out picture, the things that gives us itchy I don't know what to say. I mean, things which make us dance like monkeys on a hot tin roof, including me at times. Of course. Things are getting hot in the market. Boom, the choppy volatility. And this is a daily chart. We haven't even gone into the hourly or the 15-minute. Oh boy. Then it gets hotter and hotter. That's volatility. So here's your monthly chart. And the monthly charts are giving me a mixed picture. We have a very powerful breakout level. And each of these technical charts are created for all of you guys and for myself. So I have a I have my sanity left during the day to be as robotic as possible without completely losing my mind because of the nutty volatility that happens literally every minute. We all know that. I hate it. You think you guys hate volatility? I hate volatility. I love it because I trade it. And if I can catch the right wave, I can make some very decent money. And so do you. Fish Eyes has done that many times. I will highlight him. In an hour, up like 300%. So sure. But in general, I do not like volatility. Volatility is created to maximize stupidity. What do I mean by that? Volatility is and especially algorithmic high frequency trading volatility, hour by hour, 15, minute by minute, is created to cause maximum stupidity and maximum losses by retail investors. It's a fact. You do the most stupid things. You're sitting on a beautiful position, charts are looking great, but you're down 40% on that option trade for that moment. Many of you just dump. That's it. I'm out. I'll come back when things are good. Yeah, things are good. The next morning you wake up and they're up a gazillion points. How many times have I shown that repeatedly on multiple high beta momentum stocks that we play? Whether it be the Netflixes, the Facebooks, the Googles, name it, Alibaba, so many, Twitter. So that is where the difficulty comes in forecasting. That is where I try my best to help everybody, to help myself. But even then, at sometimes on a short-term basis, I fail. And I'll be the first one to admit that. But it's not my fault. It's the fault of the machines moving too fast. So I use my charts as a stable anchor, mental anchor, to stay calm. And then recoup the losses. Okay. And one other piece of suggestion I'll give you. The fastest way not to make huge losses is not to sell at the wrong times. How about that? If you dissect and backtest your trades based on my alerts that I put through, I can assure you that 70 to 80% of the time you sold at a loss because of your mental frailty and weakness, not my forecast, because it got there. The volatility algos made the roof monkeys, and we're all monkeys, right? On a hot tin roof. I mean, from an analogy standpoint, the volatility got so hot that you couldn't take it anymore, and you dumped. And you saw the same thing within a matter of 24 hours, if not less, sometimes the same day, get to exactly where I said it was going to go on the upside. I can assure you that is the truth. So I refuse to do that. Doesn't mean I refuse to sell. Of course I take losses. Took a nice dump loss on Amazon Lottos on Friday. Made money on a bunch of other things. I was still down on Friday. I set up some nice trades. And I tell you guys the same thing too. Use those days to set up some nice trades. You don't have to go all in, but you have to have some limited position based on what will happen the following day. I don't know what's going to happen on Monday morning. Futures are down about 3 points. Whoopee, that's supposed to be really scary. Things might get scary after 10 o'clock I think 9 or 10 o'clock when the China markets open. But I don't think they will. And I'll tell you why. Maybe some of you already know why, because I already posted the most important story of the weekend right there. Can somebody tell me what it was? If you had a chance to quickly look at the thing. What was one story that I put out there, which, make sure that I did put out there. I didn't, so I eat my own words. I'm trying to see here. Because that was the most important story. Well, I'll leave it for tonight. And then I'm going to report it. Because that was huge what came out of China. Does anyone know what it is? What did China do on Sunday, which was our Saturday?
Is it about trade negotiations?
Nah. Trade negotiations, no. This is bigger than that. I'll tell you guys in a second. All right. I thought I posted that story. It's so dumb of me not to do that. Because I was like, wow, that's great from a stock point of view. Because after all, we're nothing but, we're stock traders. We're not supposed to have any brains. Except at Clueless Day Trading, we do have some brains. So I'll tell you guys in a minute. So bottom line is this is where we are. There's a big buffer. This is where we broke out of. This massive triple top, multiple attempts. Beautiful, we trade each one of these moves. Overall, we broke out at 27.51. Bang, we went higher. And now we are in a trading range. So let's take a broader picture of what this is. This is this. Imagine this to be a cup, because you can, or a W formation. It is, after all, a W formation, dragon bullish. And then we are in a wide handle. We are in a wide handle. There we are. That is what this is. Is it something to get completely panicked about? Nope. Is it something to get forward totally complacent about? I'm never complacent. I'm always stressed out. Positive stress. I will not let my stress make me a weaker morsel. That's my philosophy in life, regardless of what happens. And I've gone through a lot of things in life. I'm sure some of you have too. Some people break, some people fight back and win. The ones which break, the ones which quit, the ones which mentally got broken, God help them. Hopefully they learn how to be strong. It might seem harsh, but I do not respect people who are mentally weak. That's why, regardless of what, and I know Donald very well overall, okay, is the fact that regardless of some of the crazy stuff that he says and does, I know he's mentally strong. And you have to respect people who are mentally strong. I do not respect people who are not mentally strong. Simple. Do I detest them? No. I feel sorry for them. And that applies for traders too. You have to be mentally strong. End of story. Sorry if I offended anybody, but that's real life. I admire people who have strong willpower, who never admit defeat. Keep fighting. So this is a large cup, and this is a handle. Right there. It is quite a few points. It is roughly about 30 points, guys. So let's now get into nitty-gritty of trading. It is roughly 27.43, 27.92, 50 points. It's a 50-point band right there. 50-point band. That roughly translates into, like I've said, around 350 Dow points. Pretty wide, no question about it. Not the end of the world. So I use my charts as my tools, as my GPS, which I always encourage all of you to do, to see where we can be and not go completely bonkers. So this way you can take certain actions which are needed. Not going to have a green P&L every day or every 2 days, believe me. But boy, if you set up your trades right, you are going to have the shooting fish in the barrel moments, which very few of you have ever enjoyed. Where you just sit there and you're like, where am I taking profits? Like, again, it doesn't matter. You're just like, so many. Of course, they give you a certain amount of hours to take those profits off the table before they whop the market down again during the day. But boy, we have had many shooting fish in the barrel moments. And if you're not set up right, you will never enjoy those moments. What can I say? Now, those setups are in difficult times. And Friday really wasn't a difficult time, but it was a very tricky day primarily because of the Russell rebalancing that sucked out money from the tech sector and shoved it into the Russell 2000 because of all the rebalancing that was going on. That's one of the reasons why a great company like Bluebird Bio fell. Why it fell? Because Kramer said Regeneron, which is also one of our picks and was up nicely, is a better company. It is two different comparisons. What the heck is he talking about? Bluebird Bio is a pioneer in CAR T therapy. Regeneron has a lot of innovative drugs too, but it ain't blue. It ain't companies like Sarepta or Sage. Those are cutting edge pioneers of that field. Regeneron is also a cutting edge genetics company. But two different things. I didn't even hear it. Somebody said, yeah, we could have made the Kramer effect. I'm sure it has something to do with the Kramer effect. But the Kramer effect does not create that kind of volume and the stock down 16. because the Kramer effect and the mom and pop saying, hey, booyah, I bought this and now it's going to be up. Am I making fun of them? Yes, I am. So I am. Okay. Yeah, I bought some, and I'm thinking this, and Kramer's like, yeah, you good man, blah, 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 blah. Garbage. You think they own Bluebird Bio? What do they own? 10 shares? It's owned primarily by hedge funds and what do you call it? Institutions. Hardcore players. They all dumped it and say that's it, all their drugs suck? No, it's because there was a massive rebalancing which caused a good portion of the drop on Friday. Not good, short term, but that's what it did. And technically, it's very oversold. It wasn't the, hi, I'm Jim from Oklahoma. I'd like to buy some WorldCom. Oh, sorry, WorldCom is not in business anymore. Sorry, I'll call you back later. All right? Those are not the bozos, dead serious, who control the blues of the world. All right? Dead serious. Now, I'm being, like straight talk here. Sorry if I offend anybody. And if I do, then I apologize. Take it for what it's worth. So, the key is that at this point, this is a major buffer. That breakout level, if it breaks, then we got to fall. And that fall is back towards 2,700. So let's be prepared for that. Let's see what happens at this zone. This is the most critical zone that we need to watch for. This is the demilitarized zone. You cross that, you're going to get shot. If you insist on, if we break this with a very large candle, then there is a good possibility. Of course, there are multiple supports. There's a gap fill here. And as a trader, you have to watch this. And then my real-time charts that I'm putting out are there to show you where we could bounce from or where we could break. If you want a definitive answer that this is definitely going to happen, well, I'm not able to give you that in this type of extreme volatility. So you have to use your own judgment for a change. After all, trading is personal responsibility with some guidance and helpful tools that I keep on providing. So we have a big gap fill here at 27.10, 27.20. Is it possible that we get there as quickly as tomorrow? It is a possibility. It will all depend on how the global reaction of the Chinese markets open and stuff a bit later on. And if the trade talks ratchet up, I know Donald sent out, Sunday there was another tweet like, if they don't immediately lower their trade tariffs and stuff, or full-scale war. Well, we already know that. That statement has already been made. So this is the level that I'm watching very, very carefully. I am net long going into this coming week for reasons I'll mention at the end of which I've already mentioned on my Twitter feed, but I'll mention at the end of this session too. So this is where we are on the daily. So watch this very carefully. And if we, some people might say, hey, that's it, that's a head. There's your left shoulder. There's your right shoulder. Yes, it is. But then you can also basically look at the fact that how many times has it looked like a right shoulder, left shoulder, and then the markets have done this. So it's mixed signals. But this is the level. This is the 27.92, 27.43. This is your level here. So if we get towards 27.78 and we break out and go to 27.92, well, no, that's when you basically dump your whole lot on your fast-moving, non-long-term setups. You don't sit there and say, oh, well, it's going to go higher. No, you sell it. If I get a pop up to 27.78, if I get a pop up over this line back to 27.78, that's a lot of money for SPX calls and SPY calls. You go from 27.55 where we closed at to 27.78. That's 20 points, 23 points, 23 points. That's more than double on your calls. So as a trader, I'll take it. And then we'll see the reaction, what happens here, whether it moves up towards these levels or not. So that's your daily chart, right? And the daily chart overall, yes, there was a little, because of this sharp drop, the Russell rebalancing stuff that occurred at the end of the day, right? We are basically now down here. Now, this level, in my opinion, will get tested, and hopefully, like I said, gets tested tonight. I really hope it does, because there will be an immediate, quick reflex bounce, either pre-market or at market open of these levels, because it looks likely it'll get tested. So on that note, let's move on to a more real-time picture. This is the daily of the actual E-minis, right? This is what's happening. Futures are down roughly 8 points right now. Things just started ticking. I'm sure some of the Asian markets started opening right now. And we can see here what is going on. Now, this is where I get excited. While many of you might get scared, this is where I get excited. None of you will be like me because I'm a clueless, idiot. I don't know much. But use your own judgment. Why do I get excited is quite simple. Because I am a technical robot. This is a daily chart. This is called the full stochastics. This is telling me that it is almost. Look at that. It's going. Futures are down 10.25. Let's go. There we go. Come on, let's go. This is getting quickly deep oversold and should be at this rate. Futures should be down 12 in the next few minutes. So right now, this is where we are. As you can clearly see here, we have had a break. This was a massive breakout on the 6th of June. And it looks likely we're going to hit that now. Futures are now 27.49.50 on real-time Globex futures. And it looks pretty likely we are going to come and retest the lows of the 21st, which was Thursday. And that low was 27.46, 4 points from here. Once it does that, what I would like to see from a technical standpoint is this full stochastics get down below 20, do something like this. Now, every time it does something like this, do you need to be a rocket scientist to figure out what happens? The markets have a very sharp reflex bounce. Every time. Not one time, not two times, every time. It gets that deep oversold on the daily. It has a very sharp reversal bounce. Whether that bounce lasts for more than a day or two, generally they last for multiple days. Or even if they last for a day, what do I care? I'll sell into that big reflex bounce. So this is where we are right now. So this is exciting, and we needed to get oversold given where we are right now. And this is real time, and that's what it's attempting to do. So if futures open down tomorrow 20 points, and the Dow futures will be down more than 200 points, look to buy, not to sell, based on the technical factors at hand. It's worked before. Unless we're going into a full-scale bear market, which we are certainly not doing. Let's take a look at the 1 hour chart. This is a clean 1 hour chart with no lines drawn. This is where we are right now. We are on the 1 hour going straight deep down into oversold. The resets are almost there. And you can see here we call this a Bollinger overshoot, but it gets out of the Bollinger Bands in a hurry. And it's certainly doing that right now with futures down 10, right there. So technically speaking, the lows that the markets can engage at this point is 27.36 to 27.41. Remember, that's what I thought would happen. That's why I was short a couple of SPX puts, which didn't work out on Friday. Remember from Thursday? It never really went there. But if this keeps on going, then we could be down another 8 points, so which means that we could be down about 19 S&P points. We shall see. But this is your 1 hour chart, and there's a massive level of support. You guys can all see this at 27.36. Now, this affects all the stocks that you're trading. So you got to know what we're looking at. Now take a look at the 15-minute. And the 15-minute is now showing you the zoomed in version. And this is what we have been trading. And this is where we are. It's falling. 14, 15, 16. There we go. All right, 16. It's now broken below this. And I can do this one right now. And it's just falling. 17. Real time. and this should be engaged. Should be engaged right now. Let's hit 20 while we're talking. And if you think that it's going to remain at 20 throughout the night, I don't think so. But this is now a complete mini flash crash on the E-mini futures as we are seeing. This was the massive reversal, the perfect moment, a multi-month opportunity to buy the market. If you all remember, the 19th of 19th, my God, that was only last week that was last Tuesday when we did buy the 19th. 19th we did buy, ladies and gentlemen, right here. Deep oversold. And this is the 19th. This was last Tuesday. Tuesday, Wednesday, Thursday, Friday. Right? So there you go. So is it possible that we hit here by tomorrow's morning's open? So what do you do at that point? You just like, oh my God, it's all over. This and that. Look at my P&L. You gotta have cash on the side. If you don't have cash on the side, hold your nose and just watch the bounce. It is going to bounce from there. No doubt about it, from the 2736 level. Unless it's one of those 1,000 point crashes, which we have only gotten 2 so far this year. Those are not normal occurrences. Those are massive black swan events, highly improbable events. So saying all that, this is what we are. And this is what you are seeing in real time, which will most probably happen tomorrow morning, is that we are going to get down right here, back towards the 2736 level, which is only 9 points away. Because what's going to happen if the market opens here, every single emotional trader, and God bless their souls, and some of you included, some of you who might be listening to this session, will panic and sell. Just give it to me. I'll buy those cheap prices. Give it to me. Give me your losses so I can turn them into my gains. How about that? Because I'll be in the red too at the open if they open like this. But the difference between me and many of those RET or retail emotion traders is I will use grit and technical focus to make money off that red P&L that I will look at in the morning. Unlike many retail emotional traders who will sell, take big fat losses, blame everybody, blame clueless day trading, blame the market, blame Donald Trump, blame their grandmas, blame the black cat they saw on the road, blame their wives, their husbands, their dogs in a fit of bad mood, and keep on making losses. That is the difference between a tactical trader and a atypical consistently money losing emotional trader. Fact. Okay, so that's where we are. Now, the thing about China, which is really huge, China has infused $108 billion on Sunday because their markets are in a free fall. Our markets are down, not in a free fall. Their markets are in a free fall, okay, because of all these trade tariff issues. And they have infused $108 billion through cutting reserve requirements for banks. In other words, banks can basically keep less money as reserve requirements mandated by the People's Bank of China, and they can use that towards cutting, buying back some of their debt and infusing them into the equity markets and do whatever they need to do. It's like the Federal Reserve coming out here and saying, hey, instead of such and such reserve requirement for Bank of America, JP Morgan, Goldman Sachs, we're loosening it in a way that they're pushing money into the economy. They want to, just like they're smart. Of course, they want to bolster their markets and not see it in a free fall. So that, in my opinion, short term is a positive, but it's a temporary measure so that the markets don't collapse. Now, what we are witnessing here, and as a trader, if I was trading right now, E-mini futures, I would be buying this hammer reversal. By that time, you guys might be sick of me saying, "What, man, this guy with his hammer reversal." Well, this guy with his hammer reversals has helped so many of you make some serious money. So many of you who have acted on it. And so many of you who have not acted on it, you deserve to lose money. I hate saying that, but it's a fact. What am I going to say? A lie to you? and say, no, you did a great job by not buying the hammer reversal. You always buy major hammer reversal. Right now, we have a hammer in front of our eyes that have gone from 2742, and I said we would hit about 2740 to 2748. That's 6 points in 6 minutes. Now, who do you think is creating that hammer? The local Home Depot guy or your handyman who came to your house? It is short covering happening right now, billions of dollars off these levels. Will the hammer stay? We'll see. The 15-minute is deep oversold, so there will be a short-term bounce. And let's take a look at the hourly and see what it's doing. The hourly also, despite the fall, is created a minor positive divergence. So as traders, you can trade off these things in a real-time market if you are an active trader. You can watch the screens and you can trade off these things. Like now, you can see you're seeing a positive divergence. We fell hard but created a higher low on the stows. So right there, you could have made 7 points or 6 points. But I still think this 2738 gets engaged and we can basically move from there. So this is what we're doing, guys. All right, this is what we're doing. It's not an easy job. Do not ask me to tell you what's going to happen every 15 minutes. I can show you major inflection points, but I cannot tell you every 5 minutes, especially after hours, what the markets are going to do. And during trading hours, things that get too volatile. One of my greatest suggestions is just don't trade that day. You might want to set up some nice long setups based on the conditions and what levels we hit. You might want to enter at those points. But if you're going to be an active trader, then get ready to be active. A lot of people say, I'm an active trader. Yes, I'm an active trader. Great. But then they're completely inactive when things are going on. So I'm ready to answer a couple of quick questions. I have had the setups that we have set up with our stocks and stuff, some long-term picture on the Spotifys, the Chipotles, the Dardens, and all that type of companies in the world that have all been put in there. So there's no point in me rehashing the whole thing. But I'm happy to answer any type of quick question that you guys might have. But this is going to be, like I said, we know what the opening is going to be at this point, right there. And we need this to be, let me show you the S&P actual chart on the E-minis. This is the actual chart on the E-minis. Now this, my friend Fish Eyes, is a total specialist. In fact, Fish Eyes, I'm going to give you, I'm going to just give you the mic, man, and you walk them through. He knows exactly what I'm going to say because that's what robots do. They say the same things. That's what they're programmed to say. We are right now engaging the 34-day moving average on the daily. The 34-day moving average is an uptrending line. The 50-day moving average is engaged at 2717. If we break the 20-day moving average right now, which is still uptrending, and we broke that at 2759, we are right now at the 34-day moving average. Is that the end of the world? Absolutely not. As long as it is uptrending. And anybody who can see and wearing the reading glasses like I am, or my fancy computer glasses, can see we are engaging the 34-day moving average right here. And we are bouncing off that. In the meantime, the full stochastics are starting to get deep oversold. We are also starting to see the McClellan oscillator create a positive divergence right there. A small one, but still positive. If we slice through the 50, things are going to get bad. Because at that point, there's going to be a flurry of big institutional orders who sell generally on a break of the 50-day moving average on their E-mini contracts. They do. And that means that we're going to retest this downtrend line all the way from here. These lines are drawn for all of you guys to know where these markets can bounce from or fall from. And that 50-day move, this is engaged again at the 50-day moving average, which is, why do I have this line here? Oh, that was the last bounce point. Hold on one second, guys. So right there, all of these are screaming higher. Now, one of the things happened, which again, Fishy would obviously, sort of just say, okay, I know what he's going to say, which he knows I'm going to say, is that we moved away too far from the rising 50 and the 34-day moving average that's known as that outsized or extreme standard deviation. We moved this is the highways that we travel in. Let me move this to yellow. These are the highways that we travel in, the 34 and the 50. These are the 34 and the 50. We also had a crossover of the 34 and the 50. Very bullish overall. In meantime, market has a lot of chop. So what happened was we moved away the standard deviation from the 34 and the 50-day moving average away from the highway. Here's your highway. Here's you driving in a car. Let me try to draw a car. That looks like a car. That looks like a Model 3, like, I don't know. That looks like a bug. Anyway, you're in a car and you completely veer off the road. No good. You completely veer off the road here. No good. So the outsized or excessive standard deviation causing overbought conditions occurred, and the market went to the upper end of this beautiful channel that I had drawn weeks ago. This wasn't drawn yesterday. These two fat blue lines, these parallel lines. Okay? And so it is now reverting back to the mean. It is coming back to the highway. The car is back on the highway. Okay, here's the wheels. These are supposed to be wheels, guys, okay? And there. So that car is back on the highway. It is back on the highway testing the 34-day moving average. Technically, nothing is wrong. There you go. What I like is we're starting to see this happen on the after hours market. Obviously, it's a very thin market out there right now, and we are getting oversold. It's going to be choppy. We might hit the 50 if things really break down. It's going to be very quick. However, before the 50, there's another white line here, which was the big neckline breakout. Big neckline breakout. Here was your big W. Here was your big breakout. And that breakout was at 27.17, which is close to the 50. There was another breakout line here on this inverse head and shoulders, and that is at 27.40. So I think the 27.40 will hold. That's my opinion, short term. We also have July 4th coming up. And generally speaking, I've said this years and years, you don't want to be heavily negative. You want to buy these tactical dips within reason prior to July 4th. So the last thing I'll tell you guys, position size is moderate. Got to be looking at the charts, real-time charts I'm producing. If you really can't look at the screens during the day, do not trade. Buy some long-term stuff on a couple of the stocks that I like a lot, or anything that you guys like, obviously, and just sit on it. Aside from that, this is standard procedure. Markets are jittery, trade stuff big time, but doesn't change the fundamental nature of the market. Strong earnings. Now, strong earnings won't be strong earnings, by the way. On a bearish note, I'll tell you, if we get into a full-scale trade war, you don't think our earnings are going to get hurt? They're going to get hurt badly. When Boeing is sanctioned, and they cancel 20 Boeing orders, and billions of dollars of agricultural products are not, are tariffed in China, because we're the biggest exporters out there. And a lot of other stuff that we make money off, because our corporations was built on the multinational corporations. What are they built on? Selling to us? No. That's why they're called multinational, guys. So I don't care how nationalistic somebody wants to get. I'm a realist. You can't be stupidly nationalistic. All right? If it's 3/4 of CFOs surveyed said that a full-scale trade war is going to hurt them. What makes America great? What makes America great, you know what I'm going to say, is the power and strength of American ingenuity and business. We are a business-minded nation. American business, technology, aircrafts, medical technology, you name it. We are the pioneers of those things. So if their CFOs are saying that we are going to get really hurt if this thing gets really ugly, I don't give a hoot what Donald says or what Peter Navarro says or or somebody just keeps on mouthing off. And I've said this before. To a certain degree, it's fine. Beyond that, it's borderline suicide. And believe me when I tell you, there is going to be huge unemployment. These companies, you think they're going to sit around and take losses? They're going to cut people right, left, and center. I don't care how much Donald screams at them. Because U.S. business should be free to do their business within, we're not some. Remember the days when the communists used to go tell their businesses what to do? We don't want to get to be like that. Our business people are great. They are here to help the United States of America. So some people might not like what I say, but I don't give two hoots. You kill American business, we're not going to be a nation who are going to dictate to the world what to do. Trust me when I tell you. So hopefully this won't get out of hand. So on that note, guys, I love you all. Let's do it tomorrow. It's not going to be an easy open, but be prepared. We shall see what happens. A lot of stuff might happen overnight, some news breaking and all that stuff, but it's going to be a busy week. But generally speaking, it is generally a very positive week. On that note, God bless you all. Good night.